Hey, Financial Patriots, thanks for tuning in. I wanted to answer this question today that I get quite a bit from my clients, and that is, how much gold or silver should I own in my portfolio? Thanks for tuning in to Financial Patriots. I am your host, Joe Gonzalez, and here at the Financial Patriots channel, I just want to help people remain free and independent as possible and help them get their wealth outside of the system and understand what gold and silver actually is. So often we hear the question, how much gold or silver should I own? And then I think about the financial advisors that are working for the big banks, the brokerage houses, and how they answer this question. And a lot of them will say 5% maybe, or 10% of your net worth could be in precious metals. A lot of them might not actually recommend precious metals. And think about that for a second, because this is hold in your hand gold and silver, a real commodity, a real asset, and they're actually kind of motivated, of course, to have your money inside of their system and trading financial instruments. And that's not what we're talking about here. We're actually talking about owning physical assets. And of course, some great financial advisors out there are working on your behalf and are fiduciaries for you and do recommend that you hold some, and they'll often refer to people like me, and that's wonderful, and I appreciate that. So I wanted to educate you a little bit more on 3 reasons why I really like to hold precious metals, gold and silver in my portfolio, and maybe this will help you to understand why gold is real wealth. Now, this is not financial advice, but I am a licensed broker with milesfranklin.com, a 30-plus-year-old firm based out of Minnesota, and Minnesota is the only state in the country with regulations for precious metals dealers, and Miles Franklin is licensed and bonded per Minnesota law, protecting all of our clients. So I'm really happy to be representing this firm. Now, the first thing I want you to think about is the real question, how much gold should I be owning? Or is the real question, how much exposure do I want to a declining dollar? And you can see from this chart right here from wallstreet.com, from the St. Louis Fed, this is the purchasing power of the consumer dollar from 2007. And you can see the purchasing power is just going down and down and down. And we know the Federal Reserve has come out and publicly stated that their intention is to keep inflation going up, which is a continued devaluance of the dollar. So they actually want to keep this chart and your purchasing power going down. So do you want to hold your dollars or your wealth in dollars that are continually declining, or would you rather buy assets? Now, let me give you an example of the gold price. Here is the gold price chart. Gold was actually introduced to the market, the public market, reintroduced, I should say, back in 1971 when Richard Nixon lifted the U.S. off of the gold standard again, and it was trading away right around $42 a share back then. And today we're trading at around $1,900, or not per share, per ounce, I apologize, trading around $1,900 per ounce right now. And you could see in this period when gold really shines is during the periods, this is 2007 to 2008, and then as we are printing more and more money and putting more and more money out into the markets, look what happens here. This is the Fed. If you just overlaid these charts, you can see how much stimulus and how much money printing has gone on since 2008, when the banks faced the financial crisis in 2008 and we were in the recession 2008, 2010. Look at that. It has this is the M1 money stock from the Federal Reserve. Look at the amount of money that has gone into the system, the amount of money that they have printed. And again, if you overlay these two stocks, or these two charts, and I apologize because I'm not that tech savvy to be able to do this both at once, you would actually look at these time frames, because they are the same time frames, and see it coming up here. But gold has not yet hit this hyperbolic last tail, as the Fed really started stimulating the economy back in May, June, July. So you see this hockey stick going right here, and gold hasn't even caught up to that hockey stick yet. But gold historically has kind of always reset against the total money supply that is in the marketplace, and it has been an undervalued asset for many years because it's not, of course, going to trade dollar for the value of all the gold in the earth or all the gold that's in existence versus all the dollars that are in existence, but it is a store of wealth, so it should track that somewhat. So based on the fact that I know that no matter who gets elected in the upcoming election, they are going to continue to grow the government and continue to stimulate the economy and continue to pump money into the system. So with that already going up hyperbolically, what do you think then happens to gold as well? And again, compare that to your dollar's declining purchasing power. Now, point number 2 that I want you to think about is that Ray Dalio, the head of Bridgewater, the largest hedge funds, and Ray Dalio being one of the richest individuals on earth, he recently, this is July of 2019 article, said that gold will be a top investment during the upcoming paradigm shift for global markets. How incredible is this guy? He knows what is happening, and he was already moving Bridgewater dollars into gold. And as you can see from this headline here, and this is the latest one in August 2020, it says, billionaire Ray Dalio's Bridgewater fund poured almost $500 million into gold in Q2. So I believe this took Bridgewater's holdings from somewhere around 10% to somewhere around 20% that they intend to hold in gold overall. I believe that's the case. And here's something else to consider. This just came out this summer. The Ohio Pension Fund decided to jump into the gold market with a 5% allocation. So this is from the Ohio Police and Fire Fund, allocating 5% to gold. Now, here's what's interesting, gang. If you don't understand, holding physical gold is, not that simple. So physical gold, like this Gold Eagle or this Credit Suisse gold bar here, keep in mind that getting that in your hand is different than the paper trades that go on in the marketplace. And I don't know whether these two firms intend to hold it physically or just do the paper trades. But here's the deal. Understand that when $800 million from one big company goes into gold and $450 million from another big company goes into gold, there is just not that much physical gold available in order to get into people's hands when they want it. So when big money like this starts moving into the gold markets, that means physical gold is going to be harder and harder to get your hands on. And there is a difference between the spot price of gold versus the actual physical coin and holdings or bars of gold value, okay? And there are many more times of paper assets than exist of real physical gold. So when people want to lay claim to gold or silver for that matter and have it in their hands, holding it in your hands is much more valuable than a claim on a piece of paper. So when these big money firms start moving their money, this is huge news. It's huge news because if something happens where the market really takes a dive and pandemonium strikes or whatever, having real gold and silver in your hands, that is what is going to make the difference, because it doesn't mean anything if you don't hold it and if you don't own it. Now, the next thing that may be news to you is that gold, prior to March or April 2019, was actually a Tier 3 asset for banks. In their reserves, it was considered a Tier 3 asset according to the Basel International Banking Regulations, which meant that as gold was held in a bank's reserve as a Tier 3 asset, it would only count as 50% collateral value. And at that time, I believe gold was trading right around, so it's 2019, so that was trading right around $1,200 per ounce when they made this announcement that they changed, Basel III Accord actually changed the international banking regulations to now allow gold to be a tier 1 asset. And here's another article about will Basel III changing gold status as a reserve assets for the banks change the future? And gold, a zero risk monetary asset, talking about the change from Basel III to tier 3 to tier 1 asset for banks, which meant it is now valued at 100% of collateral, and it is a riskless asset, which means the only other asset that is considered a riskless asset are U.S. Treasury bonds. So if the market does start to go south and the only assets that are considered tier 1 assets and riskless assets are gold or U.S. Treasury bonds, and Treasury bonds are already yielding 0.7% and are at the top of their game, do you think that the bond prices have room to move any further up? Or is gold severely undervalued and gold will continue to rise? If bonds are priced at their peak right now and yields are at their lowest 0.7%, then the only thing that could happen is that interest rates are to go up, bond prices come down, which is actually a bond crash then. So in terms of a flight to quality, then gold is going to be the new king in my estimation. So if gold is trading around $1,900 today, but it was trading around $1,200 when this switch was made from 50% value to 100% of value, essentially a $1,200 represented one half the value, which would mean gold would have to be at least $2,500 today. And this doesn't even consider how much money has been pumped into the system since over this summer of March to June of 2020, and how much is coming up over the next several months or several years. Do you think that they're going to continue to stimulate the economy and the Fed is going to continue to hold up the asset markets? So for these three reasons, I'm a big believer that gold should be a significant part of the portfolio as the economy continues to bewilder us and strange things continue to happen. I think it only points towards a positive outlook for gold myself. So as I said, if you want to learn more about buying precious metals, about buying gold and silver and holding it physically in your hand, I am a licensed broker rep with Miles Franklin based out of Minnesota, and we can work with you over the telephone to get you into some assets that you like and get quotes for you. So if you want to contact me at joefinancialpatriots@gmail.com, joefinancialpatriots@gmail.com, and include your phone number so I can get back to you. And go ahead and check out milesfranklin.com so you can see some of the things on the website, and then get back to me and we can talk about your future with gold and silver in your portfolio, protecting your wealth and being a financial patriot. Thanks a lot for watching.